this meeting of the House and Senate Taxes Conference Committee on House File 5247. This morning, we're going to consider provisions to adopt with regard to the tax increment financing article and also the minerals article. We are going to, and then we'll continue to a discussion and some testimony on the local sales tax reforms that are in either bill. There are some major differences. The discussion will be pretty grainy. It's not going to be high level. It's going to be really looking at the differences, and we're going to depend upon our nonpartisan staff to get us at that level. So we are going to start with the TIF article, and Mr. Sylvia and your counterpart, if you would go through that for us, and then I believe Representative Lee is prepared to make a motion, but we want to be clear of which provisions were changed between the House and the Senate, and be intentional about this amendment, and then after the motion is made and before we take a vote, I have some other comments. Mr. Sylvia.
Madam Chair, just to clarify, is it your request that I go city by city and then the amendments are amended or adopted?
And Mr. Sylvia, if you could bring the mic down a little bit more. Thank you.
Madam Chair, is it your request that I go city by city, or is the motion being considered after each city, given that a few have amendments?
No, it's going to be an article adoption, but we need to know the particulars if they are different from as introduced or in the document that we have from 5/10/7/20 p.m. Where we are adopting them. And on the side-by-side, it's pages 34 through 39.
Thank you, Madam Chair, members. As Senator has indicated, the document is Taxes Conference Committee adoption list, May 11th, with a timestamp of May 10th at 7:20 p.m. Starting from the top, the city of Ramsey, both the Senate and House had identical language. This would provide an extension of the requirement that the city pass a resolution detailing interfund loan resolutions until December 31st, 2024. Those are identical, and this adoption list would recommend that the House language be considered. The next is the city of Maple Grove. Again, both the House and the Senate had identical provisions. However, the effective date was just formatted differently. This section would extend the 5-year rule by an additional 5 years to 13 years, and also extend the duration of the district by an additional 5 years to 25 years total. The recommendation here would be to adopt Senate language, which has, as I noted, a different effective date, but the intent from both the House and the Senate proposal are the same. For the city of St. Paul, again, these two provisions were identical. This would extend the 5-year rule to 10 years and provide a corresponding extension of the 6-year rule for TIF district within the city of St. Paul. The recommendation here would be to adopt the House language. Moving on to the city of Brooklyn Center, the House and Senate were very similar. However, there was one additional component within the Senate language, two additional components. One was that the Senate limited the number of districts that could be established pursuant to the special legislation to not more than 2, whereas the House would provide for multiple TIF districts. And lastly, the Senate provided the pooling exemption and would allow increment to be expended outside the project area, and those expenditures would be deemed in district. There is a recommendation that the Senate language be included. However, there is an amendment, the A36 amendment, that would delete that additional pooling allowance as provided for in the Senate language. The city of Brooklyn Park had 3 TIF districts. Those dealing with are identified as Village Creek, 610 Zane, and Biotech. Both the House and the Senate provided similar special law exemptions, those being an exemption from the blight test, the requirement that 90% of increment be used to correct blight conditions. The only change was that the House in those 3 city special exemptions also extended the 5-year rule to 10 years, and then there was a corresponding extension of the 6-year rule. What is being recommended on this document is that the Senate proposals be adopted. That does not include extensions of the 5- and 6-year rules. The city of Edina, both the House and the Senate, again, had very similar proposals with 2 notable differences. The Senate limited the number of districts that could be established pursuant to this special legislation to not more than 2, and also allowed the city until December 31st, 2030 to adopt a TIF plan pursuant to the special legislation. What is recommended here is that the Senate language be adopted. However, the change that was included in the House proposal, which would provide that that special legislation be adopted by 2025, would be included, not the Senate language, which provides for an extension until 2030. The next 2 sections deal with the city of Edina. The city of Edina had 2 different TIF requests within the city, both of which were nearly identical in the House and Senate proposal. However, in the second, there is a difference. In the first, which was city of Edina, 72nd and France 2, both the House and the Senate extended the 5-year rule, and there was a corresponding extension of the 6-year rule. And also there was a duration extension that are identical in both the House and the Senate. In the city of Edina's request concerning the 70th and France TIF district, there was one difference. Both the House and the Senate extends the 5-year rule. However, there was a difference in how long the duration extension was. The House proposed a 10-year duration extension and the Senate a 5-year duration extension. What appears on the offer or adoption sheet is that both the House provisions for 72nd and France and 70th and France would be adopted, so that concerning that second district, the district would receive a 10-year duration extension. The next section, Madam Chair and members, is a TIF proposal from the city of Minnetonka. Both the House and the Senate have identical proposals that extend the 5-year rule with a corresponding extension of the 6-year rule. There was just some minor inconsequential language formatting differences, but the intent was the same. This adoption sheet recommends that the conference committee adopt the House section. However, there is an amendment, and this amendment would specify that the district specified within the special legislation would be exempt from the requirement that 90% of increment be spent on blight correction. The next section, Madam Chair and members, is from the city of Moorhead. Both the House and the Senate, again, had identical proposals, and this was an extension of the 5-year rule and also a corresponding extension of the 6-year rule. There were some minor formatting differences again, but both the intent from both the House and the Senate were identical, and the recommendation here would be to adopt the city proposal as it appeared in the House language. Moving on to the next section, which is the city of Plymouth. Both the House and Senate had, again, nearly identical proposals. There were some formatting differences, and one notable difference that the Senate limits the number of districts that could be established pursuant to this legislation to not more than 2. The House allowed for multiple TIF districts. What is recommended here in this adoption sheet is that the House language be approved. And lastly, Madam Chair and members, is the City of St. Cloud. Again, nearly identical proposals with those two notable differences. The formatting difference related to the 90% not being used for blight correction, and the limitation in the Senate that not more than 2 districts be established. What is recommended here, Madam Chair, members, is that the Senate language be adopted. And Madam Chair, that concludes a walkthrough of the adoption sheet for the TIF proposals.
So, Mr. Sylvia, with regard to the city of Plymouth, we're taking the Senate language of Section 13, limiting it to 2 districts?
Madam Chair and members, that is correct.
Okay. Are there any, before we get to a motion, are there any questions or input from House Counsel on the proposal that Mr. Sylvia just went through?
Madam Chair, no, Mr. Sylvia described everything correctly, so I don't have any further input.
I just touched my ear and I discovered I do not have my hearing aids in. So you're going to have to speak a whole lot louder. Thank you very much.
Madam Chair, Mr. Sylvia described everything correctly and accurately, so I don't have anything to add.
Thank you very much. Any questions or comments from members from either conference committee? Seeing none, Representative Lee?
Madam Chair, just for clarity, would you like us to adopt all of the amendments before we move to adoption?
Representative Lee, I believe yesterday we adopted the amendments individually, and then we can adopt the proposal reflecting those amendments. So I think we have to have three short votes to start with, and then we can do the whole thing.
Thank you, Chair. Accordingly, I move to adopt the A36.
36.
A36.
The A36. So, members, the A36 is in front of us. All those in favor, please say aye. Aye. Opposed, say no. The motion prevails and the amendment is adopted. Representative Lee.
I move to adopt the A37.
Representative Lee moves to adopt the A37. Discussion. Seeing none, all those in favor, please say aye.
Aye.
Opposed, say no. The motion prevails and the amendment is adopted. Representative Lee.
I move to adopt the A38.
Representative Lee moves the adoption of the A38 amendment regarding Minnetonka. All those in favor, please say aye. Aye. Opposed, say no. The motion prevails and the amendment is adopted. Before we vote on the whole thing, I have a few comments. Representative Gomez, I wondered if you wanted to say anything about tax increment financing in this bill.
Yeah, thank you, Madam Chair. So I guess I would just say kind of the thing that I always say at the beginning of our, kind of the first TIF bill that we hear in our property tax division. I usually just go on a little rant about the fact that cities are allowed to use TIF by right in certain ways. And every time we have a community that comes in front of the legislature, they're asking for an exception to a rule. And I think that, this is related to a lot of things that we discuss in the tax realm, local government aid and CPA and fiscal disparities and the sort of what our obligation as the state government is to our local partners to help them meet the needs of our shared constituents, and the way that over time, as a percentage of our budget, that contribution that the state makes to our local governments, which are, they're created by the state, and so we have obligations to them. that contribution has gone down and down as a percentage of GDP, as a percentage of overall of our budget. And so we see, that our local partners don't have the privilege of saying, we're not going to raise taxes, we're going to be ideologically pure, because streets have to get plowed, they have to get patched if there's a hole in them. People expect that when they call 911, there's somebody there to help them. Our schools, their doors have to open every day, and they have to educate our children. And so when we don't do our job as the people in charge of the overall tax code, then our local partners are forced to go to their property taxpayers or to try to use other tools in increasingly bizarre ways, frankly. And so, these issues, and we're going to talk about local sales taxes in a little bit, these issues are all related. And so, I'm grateful that we were able, Madam Chair, to work together last year to get our LGA and CPA numbers up to what they were in 2002. Okay, so 22 years of inflation and increased pressures on our local governments, and we finally got back to that funding level last year. And as you can imagine, that is not adequate, right, for so many of our partners. And so, I guess it's my pitch for just saying that we need to do our jobs here at the state. We have to fund education adequately. We have to fund transportation adequately. We are increasingly talking about how it is that we fund housing adequately. Those basic things that all of our residents need in order to have a good life and be able to build what they need for their families. Because we have a progressive tax code. We have different kinds of tools available to us at the state level than our local partners do. Our local partners have no choice but to rely on the most regressive forms of taxes that we have, which means that they hit struggling families harder. And so I just want us to think, whenever we hear this message about, how we need to cut taxes for the wealthier corporations, that what that means, because our local partners don't have another choice, is that it's going to go back on them. And so, I just want to say on TIF specifically, it's that we receive, in my few years here, we've started to get proposals that want to spend the increment from TIF in different ways than is allowed under law, and then increasingly in ways that's different than the situations in which we've allowed exceptions in the past. And that's not like a solution to the problem, doing these one-off exceptions. And so, Chair Rest, of course, is well known for taking a really taking a critical look at these and making sure that we're not setting bad precedent with respect to how this increment is used, and that these tools are used appropriately. And so I want to thank you for that, for all of that work over the years. And I think that because of your sharp eye on tax increment financing, we don't have as many bad precedents in this space as we would otherwise. Certainly, we can say that. And just that, when we see these, it's not to criticize our local governments, because they're trying to do what they need to do. And it's that we need to do our jobs too. And then, we won't be seeing really unusual uses of TIF. And I'm going to just give a tip to anybody who comes in front of a committee that I'm chairing who talks about how they want to, I have this really creative, cool, novel use of TIF. It's the wrong argument to use, because any creative or special or novel use of TIF, as Chair Rest hopefully will back me up on, it just can create new precedents And, the fewer exceptions that we're granting in this area, as far as I'm concerned, the better. Because if we are just receiving proposal after proposal after proposal with the same exceptions, then we need to take a look at our general laws. And so thank you, Madam Chair, for the opportunity to talk a little about that.
Thank you, Representative Gomez. I do concur in many of the statements that you made, but I also want to emphasize that our local governments, particularly our cities, have very few tools to promote and be successful at promoting economic development or redevelopment within their boundaries. And the original intent of tax increment financing was to correct blight in inner cities, in the inner cities. And since that time, we have not only had the 25-year redevelopment districts, which are charged with correcting blight, but we have had the creation of other types of districts, housing districts, renovation districts, hazardous substance sub-districts, economic development districts, which are bare ground districts, primarily used in greater Minnesota, each with different requirements and of different lengths. What we have noticed, however, and we would hope that we don't get a list of 1, 2, 3, whatever it is, 10, 12 proposals every single year that ask for exceptions from the rule. We will have really good TIF statutes if in a single year we don't get any, because the statutes that we have adopted are adequate for local governments to use this tool without having to come to the legislature. However, in the last few years, maybe more so than ever, we have gotten requests for waiving rules having to do with blight, particularly with the more stringent restrictions on redevelopment districts as opposed to the renovation districts, which are a shorter period of time, and which has caused me, and I have had brief discussion with Representative Gomez, to think that maybe now is the time in the next year, because this year I'm not supporting and reject any kind of general law changes to tax increment statutes, to give us time to think through where possibilities for improving the general statutes could occur, and looking at particularly the great work that was done a couple of years ago by the State Auditor's Office in the person of Jason Nord, to see if there is some more modern definitions in the general law. And especially we get, or I note that we get the special legislation that wants to be excused from the blight definition. The blight definition has been there since the 70s, when we were doing a lot of urban renewal, and without having tax increment financing, inner cities were decaying right and left. But this is some 50 years later, and that we should take a look at the efficacy of the blight definition that is in the current statutes, and the length of time, 25 years versus 15 years. And the renovation districts, of course, have a looser requirement for blight, that we may be able to present some more general law changes with regard to blight, and perhaps also We often get these proposals come with sometimes outrageous proposals for extension of the 5- and 6-year rule. But even before the district is certified, somehow they already know they need 15 years to build a building or do a project. Then after they've gotten started and understand that it's going to take a whole lot longer and come back and ask for that extension. What I think has been a good curb within the statutes is the requirement that if a district is granted temporarily, or a city is granted temporarily to extend the duration of the district, that has to be approved by the local governments, particularly school districts whose tax base would be affected by the extension of the districts, the duration. And on occasion, the school district has said, no. Get the district done in the time that you have and decertify it. We are not going to support extension of it. A lot of times they do support it. They see it is to their advantage, but that particular veto power, I think, is a very important tool for the other local government jurisdictions that are affected by a city's decision with regard to tax increment. So I hope that local governments that are have been dealing with special legislation, as well as those who are able to manage to certify TIF districts without coming within the general law right now, that they will join the legislature in reviewing the general law changes, not just consolidating them and making them and getting rid of internal contradictions like we've had before, but really is if this next year is the moment that we should consider a revision, particularly of the provisions that I just described. So I'm looking forward to that work getting done. It's not going to be any task force. It's not going to be in the bill. It's just going to be willing partners who are interested in discussing the general tax increment financing statutes. And with that, Representative Lee would now, unless anybody else wants to say something. Representative Lee, if you would restate now your motion as amended by the A 36, 37, and 38.
Thank you, Chair. Sure. I move to adopt the tax increment and financing article. Pardon. For clarity, would you like me to go through every section? Great. So I move to adopt the House language from Article 5, Section 1, and also move to adopt the Senate language from Article 5, Section 2. In this motion, we are adopting the House language from Article 5, Section 3. Senate language, Article 5, Section 4, as amended by the A36. Senate language, Article 5, Section 5. Senate language, Article 5, Section 6. Senate language, Article 5, Section 7. Senate language, Article 5, Section 8, as amended by the A37. House language, Article 5, Section 9. House language, Article 5, Section 10. House language, Article 5, Section 11, as amended by the A38. House language, Article 5, Section 12. Senate language, Article 5, Section 13. Senate language, Article 5, Section 14.
That's the motion. Any further discussion? Seeing none, all those in favor, please say aye.
Aye.
Opposed, say no. The motion prevails, and the Representative Lee's motion is adopted. The next topic we will take up, it reflects very fine work done by members of the House and the Senate. Two members who are serving from the Iron Range on this conference committees, Representative Leslie Gard and Senator Housechild. Going to ask nonpartisan staff to review the results of the discussions and conversations between or among the members of the of those that represent the Iron Range in the legislature, and then we'll have comments from both Representative Leslie Gard and Senator Housechild. So we'll begin. Mr.
Madam
Sylvia.
Chair and members, coming into conference committee, the House and Senate had nearly identical minerals articles. There were two notable differences. One was that the Senate included a section that the House did not concerning the use of proceeds for certain scholarship funds to be used for trade programs in addition to accredited college or university within the state. And there were some differences within the two sections that provided authorization for bonds. And what appears now in front of the committee is the A34 amendment with a timestamp of May 10th at 3:41 p.m. And this is the language of the Senate article with a notable few changes that I can go through now. First is that within a section that renames the Iron Range School Consolidation and Cooperatively Operated School Account, the new Iron Range Schools and Community Development Account, there is an increase for 8 years from 10 to 24 cents of the taconite production tax that it is deposited into the account. Beginning with distributions in 2033, that 24-cent distribution is then reverted back to current law, 10 cents. Both the House and Senate original minerals articles also included increased transfers from the Douglas J. Johnson Economic Protection Trust Fund to the new school account. That transfer has been eliminated, so there is no additional transfer from that DJJ to the school account, and the current law transfer of $3.5 million is maintained. There are a few differences within the two sections that authorized the issuance of bonds. Most of these changes were as a result of some communication with IRRB bond attorneys, just to sort of clarify and make the language stronger. And changes here include a clarification that all sources of revenue within the schools and community development account can now be used for the payment of bonds. The original language, although the intent was to use all sources of revenue, the language sort of could be interpreted to include that it was only one part from the taconite proceed distribution, and this is a clarification that all sources of revenue could be used. There's also language that provides clarity on bond parity concerning that bonds previously issued and paid for through taconite tax revenue. There is language that includes credit enhancement language for both the 24 and 25 bond issuance. There's language that provides funds shall be available for 30 months from the date of issuance, and that any unexpended funds shall cancel to the IRRB account to be used by the Commissioner of IRRB for publicly owned capital investments within the taconite tax relief area. And lastly, there is language that requires the bonds that are issued for 2024. Those bonds must be issued by March 31st of 2025. That language was in the House minerals article, but not in the Senate, but it is moved into this amendment and carried forward. Lastly, there are a number of sort of changes made to the grants, grant amounts, and grant usage, and I'll just sort of highlight some of the notable differences. One is a change to the grant amount for the city of Virginia. The clarification is that the amount allocated to the city must be transferred to Essentia Health Virginia, and the language is very specific that it has to be used for designated uses relating to the hospital. There is also some changes made to the allocation for the Minnesota Discovery Center in both the 24 and 25 bond issuance, that a portion of which could be used for operating expenses. And lastly, Madam Chair, members, there are a few additional grant allocations to the city of Hibbing, one for the school district to be used for long-term maintenance needs, another allocation for housing development costs, and lastly, an allocation for use for the Hull Rust Mine. Other than those identified changes, Madam Chair, the articles are identical as they appear in both the House and Senate.
Thank you very much, Mr. Sylvia. To have discussion on this, Representative Leslie, would you move the A34 amendment?
Thank you, Madam Chair. I move the adoption of the A34 amendment to the Senate bill.
It's to the House file. I thought you said to the Senate bill. You mean to House File 5247?
Yes.
Okay. Representative Leslie, would you like to comment on the amendment?
Well, I would just, thank you, Madam Chair. I would just like to thank everyone involved for all the hard work and putting this together. I would like to thank my colleagues on both sides of the aisle for those that engaged in making this bill better for the people of the Iron Range. And I would like to thank my colleague, Senator Hochschild, for his hard work and vision and being a partner to improve the people's lives on the Iron Range that need it most.
Thank you, Representative Leslie. Senator Hochschild, your comments, and maybe you might want to highlight some of the provisions in the bill that you think are the most important.
Thank you, Madam Chair. Members, I also want to thank Representative Listlegard as well as the rest of the Iron Range delegation. The Iron Range delegation has a long history of negotiating minerals articles, and this is maybe one for the history books. But it's been a lot of fun, and we've come to, I think, a place that's going to be very beneficial to our region. A couple of things to highlight from this amendment is that we're making some additional contributions, as Mr. Sylvia suggested, to the city of Hibbing, as well as a Lone Pine project in Itasca County, which was not included in the original bill. And I think that was a really great opportunity to sort of disperse some of the funds to other areas that were brought to us by community leaders, commissioners, and other members of the Iron Range delegation. I think what is most impactful about this bill is that we are giving mining proceeds back to the people and back to the very communities where mining happens, both in property tax relief, historic property tax relief, as well as local projects for community members to improve their quality of life. That's something that hasn't necessarily been done through the minerals article as often. We've done large bond proceeds for industry projects, for Giants Ridge recreation, for these big things, right, which I think are important. But this is really a time when we are giving it back to the very people who work hard in our mines. And I think that's a very special thing. And so I'm very excited about this minerals article. And Madam Chair, I appreciate, and Madam Chair, I appreciate both of your willingness to work with us on this mineral article.
Thank you, Senator Hochschild. Is there any other discussion or question? Senator Weber.
Thank you, Madam Chair. As I mentioned to you yesterday, I have no intention of going through the same list of comments I made when the original bill came to our tax committee. I just want to state that I am still disappointed that this bill was developed originally without the input of all the members of the range. As I understand the past practice, we have typically abided by the consensus that was reached. However, there was no consensus when this bill was originally presented. And I would hope that in the future, any minerals bill that is presented to our respective tax committee would have gone through the process that it went through after the original introduction, so that all parties could have some input into the final bill. Thank you, Madam Chair.
Thank you, Senator Weber. Any further comments or discussion? Then on the Representative Leslie motion to amend House File number 5247 with the A34 amendment, please say aye. Aye. Opposed, say no. The motion prevails and the amendment is adopted. The next topic for our conference committee this morning has to do with the local sales tax reforms. Just brief review. Last year, we allowed some 30-some local governments to, as according to the law, to develop proposals, come to the legislature, and then get approval to approach their constituencies to pass a, or to deal with, to vote on a local sales tax proposal. Last year, there were some 7 or 8 cities that had general elections during, in November. Most of the cities did not, and they had to wait, or they decided to wait until general election this year. And there's a 2-year window. There's some disparities between cities that have, like the city of Minneapolis, who tends to have a general election every year. So they have much more opportunity would have much more opportunity to act on a local sales tax proposal. The one entity that chose to go ahead with their proposal and putting it before the voters was Beltrami County, which did not have a general election, and indeed, they went forward with a special election, and the legislature subsequently ratified the results of that election, the voters having approved it with above 90% consent to accomplish that. Meanwhile, we also imposed a moratorium on local sales taxes under current law and any new proposals. And at the suggestion of the House and the Department of Revenue Commissioner, and certainly with my agreement, in the tax bill, established a local sales tax advisory task force. It was headed by Commissioner Marquardt, and they met on a biweekly basis for a number of weeks, and their charge was to come up with a report, which they gave to us in at the beginning of February. All our members have the report in front of you as we go through the legislation and the differences between the House and the Senate, and then take some testimony. We will not be taking action today, but some testimony. Then there'll be an opportunity to engage, and there is also a number of statements from primarily from local governments, but there's 4 or 5 organizations that also wanted us to be aware of their provision, of their positions with regard to this. And there is an additional handout with regard to the projects. Looks like this. It's coming out now if you don't already have it, that we prepared that show in terms of the concentrated use of the local sales tax, those projects that were authorized in 2023 in the omnibus bill, and just what what in general those referenda that are coming up are dealing with. And I would point out that if you look at that, and there are positions in either the House or the Senate bill dealing with these reforms suggested by the task force. But I think it's important to see that there were 6 cities, and not all, only 3 of them are metro cities, asked for the opportunity to approach their voters for community centers. Then and then there's some that were just a couple of things that you can see on the sheet, but for law enforcement, public safety centers, once again, there are 5 of them, and 2 of them, only 2 of them are metro, Golden Valley and Woodbury. The Golden Valley last year had a general election in November, and their referendum passed. And then for parks and trails, and I think you'll see in the discussion of the recommendations regarding this issue in either bill, that there are 10 referenda that were approved, and 5 of them, half of them are in a metro area, including also the successful one in St. Paul. And then sports or recreational facilities, there were 11 that were authorized, and 5 of the 11 are in the metro. So just to give a report on how it's being used or proposed to be used, and those questions that will be on the ballot are not affected by the moratorium, nor are they affected by the potential for reform legislation that we have already approved. So I've asked Senate Council and House Research to then give a fairly grainy, rather than high-level, review of the differences, similarities of the approach to local tax reform. Unfortunately, in terms of the time in which we needed to take these issues up, Commissioner Marquardt, who was the chair of the task force, is not able to be with us this morning. So now I'm going to turn to our nonpartisan staff to go through the comparisons, contrasts. Ms. Powell.
Madam Chair and members, there's a document that I think was distributed with the header Local Sales Tax Reform Topics. And this is a table of a number of issues that Ms. Hagler and I have identified that present some differences. The scope of the difference is, can be from small but still important to major differences in the 2 approaches to the local sales tax reform article. So we'll go through the topics that are on the far left of the table, and then the references to the sections and the pages in the side-by-side are listed in that same row. And Madam Chair, I think Ms. Hagler and I will just kind of generally discuss the topic and discuss how the approaches are different. And then is it your preference that we wait until we have member questions after each topic, or would you like us to go through the list entirely first?
I think let's take it topic by topic, if that's okay.
Madam Chair, I will start with the first row, which is changes to existing law governing local sales taxes. And this is the Chapter 297A.99 in the sales tax chapter. The Senate does not make many changes to this article, or to this section of law. There are three kind of new provisions that are also mirrored in the new local sales tax article that would, and these new provisions would apply to currently imposed local sales taxes under 297A.99. The first is that a political subdivision cannot commingle revenue from a tax for projects approved under current law with any other tax authorized under current law or a special law ordinance and so forth, including if a local sales tax were to be enacted under the new section of the sales tax reform provision. There's some new notification requirements for, again, currently imposed local sales taxes, that the political subdivision must notify the commissioner at least 60 days before they anticipate that the revenues from the tax are sufficient to fund the projects that were approved by the voters. And then the political subdivision must also notify the commissioner within 30 days after sufficient revenues have been raised, and so the tax that would then be discontinued. And then finally, Madam Chair, there is a new provision added to current law that says that the total tax rate under current law or any ordinance, city charter, or any other special law cannot exceed 1%. Now, there are a number of jurisdictions that have a local sales tax rate that currently exceeds 1%. And so they would be kind of grandfathered in under this provision. However, when a local sales tax authorized under current law expires, then the 1% limit would apply. And Madam Chair, that concludes the Senate approach to existing law governing local sales taxes.
Thank you very much. I would note with regard to the requirement on the Senate side for the political subdivision to notify the Department of Revenue, the commissioner, within 30 days after the date that there's funds sufficient to pay off the bonds, that we did experience one city that continued to collect the tax, and a few years ago, without making that clear that the bonds had been paid off. And as most of you know, Minnesota is a streamlined sales tax state, and we agree as a partner in that to abide by certain standards or rules for instituting a tax, a local tax. It's never immediate. There's always a waiting period so that the certified service providers are able to update their software for remote sellers and people that have to, those who have to collect it. And then we want to make sure that when there is sufficient funds, that the sales tax that may be continued to be collected is not diverted to the other purposes So that, those provisions that were in, that we just mentioned, Ms. Pollock just mentioned about subdivision 15. I guess I should have talked about that's the Senate language, which is not Article 15, not Section 15. But the House language with regard to administration and termination.
Madam Chair, so on the House side for the changes to existing law, we do kind of many of the things that Ms. Pollock addressed, maybe elsewhere in the bill. The House language attempts to clarify that Section 297A.99 applies to local authorizations that occurred before July 1, 2024. But that if any of those local taxes are amended in the future, they would be subject to the new rules of the new 297A.9901, which is Section 4 of the House bill. The House bill requires that all local sales taxes, even ones that are already authorized, are subject to reporting requirements to the Office of the State Auditor that are in Section 5 of the House bill. There's a requirement that special laws must file a certificate of local approval, which is usually included in effective dates of the special law when they're enacted, but decided to codify it, and then impose the requirement that if the tax is approved by the voters, it must be imposed within 15 months. And then lastly, there's a provision that imposes a requirement if a project is canceled for any reason, that funds must be returned to the Department of Revenue, and DOR has to adjust the tax duration. And then, as Ms. Pollock discussed, there is a modification to the trigger of the 1% cap, where if a city modifies or extends a current tax, it becomes subject to that 1% cap. And then the notification, the 60-day notification to the Department of Revenue is located elsewhere in the House bill. And Madam Chair, that concludes Sections 1, 2, and 3 of House Article 6, the changes to existing law.
Thank you very much. Are there questions from the members about the differences in changes to existing law governing local sales tax? Seeing none, we'll continue to the next section.
Madam Chair and members, the next row concerns projects that may be funded with local sales tax revenues without legislative approval. And these would be in the new section of law that takes up the large part of this article. And I should note, Madam Chair, the Senate language, it lists Section 3, Subdivision 4. It should say Subdivision 1. And these are definitions of the types of projects that may be funded by locals with local sales taxes. The Senate allows local sales taxes to fund construction of airports and regional community centers, where the House does not. And the Senate has different definitions of park or trail. The Senate definitions are largely based on the recommendation from the task force report that references criteria in the 2011 Parks and Trails Legacy Plan. There are a handful of definitions, Madam Chair, for example, the criminal justice facilities, so law enforcement centers, district courts, and correctional facilities that are largely the same. But the airports and the regional community centers and parks and trails are the big differences in the two in the two respective definitions article or section.
Go ahead.
Madam Chair, I don't have much to add to what Ms. Pollock just noted. I'll just note that the House definition of convention centers includes the square footage and public meeting space and parking requirements, whereas I think that is located within a different provision under the Senate bill, but they are the same requirements.
Okay, thank you. The policy statement,
Madam Chair, the Senate language contains a policy statement that reflects a policy statement that was part of the recommendations in the local sales task force report. And it also mirrors some language that is included in the current law governing local sales taxes, stating that the projects must be regional in nature. They must serve a regional population, and if access fees are charged, must be charged in the same way to both residents and non-residents of the community. Madam Chair, the House does not have a comparable policy statement.
Thank you. So we don't need you to repeat that, okay? The next topic, the requirements for specific facilities or projects. Ms. Pollock?
Madam Chair, the Senate includes some specific requirements to enact a local sales tax to fund a regional sports complex or regional convention center. And this was based in part on the recommendations from the task force report. The local community would have to demonstrate one of three things: an analysis of the surrounding region demonstrating that there is no similar facility that is open to non-residents and residents at the same cost, obtain resolutions adopted by at least 2 adjacent local governments stating support for the project, or development of a model of revenue sharing with surrounding communities. Madam Chair, the Senate also has some different requirements to demonstrate the necessity of criminal justice facilities, specifically for a correctional facility, documentation of the age of the facility, official correspondence from the Department of Corrections that includes an analysis of the facility and a description of the improvements needed. Or if the facility is a joint project between 2 counties, a joint powers agreement or other similar documentation demonstrating the facility will serve the public safety functions of the region. And Madam Chair, I think that is the big difference with the criminal justice facilities, and Ms. Hagler will correct me there if I'm wrong. And then finally, Madam Chair, again, the Senate allows local sales taxes to fund airports and convention centers. And here, as with parks and trails, the local government would just need to prove or would need to demonstrate how the project meets the definition in the earlier portion of the section of law.
Ms. Hagler?
Madam Chair and members, in the House article, there are different requirements for sports complexes and convention centers, mainly that for the non-metro area, the localities would need to demonstrate that there is not a similar facility within 15 miles. And then for any in the metro would be 8 miles. And then has a similar entry fee requirement, as Ms. Pollock described, of being the same for residents and non-residents if entry fees are required. The requirements for criminal justice facilities, district courts, and law enforcement, I believe are the same, just worded slightly different, but the intent is the same. The parks and trails requirements are codified portions of the legacy plan that is referenced, that Ms. Pollock referenced, and allows Department of Revenue to use that legacy plan as guidance when approving the project. And there is a requirement that localities submit all documentation for all of these projects to DOR for verification. Ms. Pollock referenced the revenue sharing and letters of some support from surrounding communities, and that is addressed differently in the House bill, but just in a different location.
Ms. Pollock? Oh, I'm sorry, Representative Gomez.
Thank you, Madam Chair. I'll probably offer just some more general comments a little later with your indulgence, but I just wanted to talk quickly about the county jails kind of issue. So, originally, my kind of original cut at this did not include county jails. That is, as you can see on this really helpful document that you put together about last year's requests, there were a few county jails that were approved. It kind of came to my attention, so I didn't include them initially, and then, hearing feedback from some of my members in my caucus, I added them as an amendment during markup, I think. And so since that time, though, it came to my attention that this has very much been a topic of conversation in the capital investment and public safety committees and in those policy areas and those experts who think about these facilities. So, the fact of the matter is that we have, I mean, I don't know if there are 87 of them, but there's probably pretty close to 87 county jails across the state. Maybe there are some smaller counties where they share facilities, but I mean, we certainly have heard in both of our committees about some of these facilities reaching the end of their useful life. And of course, I think that none of us want people to be waiting around because, it's taking longer and longer maybe for people are spending more time in these facilities, and we want them to be adequate and for the people who are, incarcerated there not to have a terrible quality of life because they're in a crumbling, awful facility that isn't designed to provide, access to outdoors, access to programming that we know people need in order to be restored, because, the point of our criminal justice system should be to restore people back to their being in right relationship with their community. And so I definitely understand that. And also we have the Department of Corrections, who's responsible for licensing county jails, has been telling them hey, these are insufficient. These are not okay. These have reached the end of their useful life. And so our counties are in a really hard position. They're very expensive facilities to replace. Very expensive, particularly when you are trying to provide, just some of those more kind of adequate, I don't want to call them amenities because you're in county jail, right? But just basic stuff, so that people aren't just in their little spot all the time, because that has a really, deleterious impact on people's mental health, and there are all of these other kind of considerations there. Also, though, if we use local sales taxes, if we let all those 87 counties build those incredibly expensive facilities with local sales taxes or anything, or, other sources of state or other sources of funding, then we're going to be in the same situation in 25, 30 years. And we have to take a look at whether every single county needs their own jail. And so in the Public Safety Committee in 2023, in the public safety bill that was passed, there was a study that was part of it that I became aware of after I had added county jails back to the House position on this article. And it's due to be delivered on December 1st of 2024. And it directed the Commissioner of Corrections, or the Commissioner of Corrections, to actually analyze in a comprehensive way across the state whether there needs to be a consolidation of some of these facilities, whether we are going to regionalize this system, whether that makes more sense, whether it makes sense for every county to have their own facility. This was actually when Senator Drazkowski was Representative Drazkowski, we had an interesting moment in Property Tax Division where kind of from different perspectives we came to the same place on, using this tool, local sales taxes, to build county jails. And one of my concerns was about, if we're overbuilding places in jails across the state, if you have two counties next to each other that are building shiny, new, multi-hundred-bed facilities, there's an incentive to fill those beds. There's an incentive built in to fill hundreds of cells with people. And I have a problem with that personally, and my constituents have a problem with that across the state. This is something that we have to think about when we're thinking about building infrastructure. Are there like incentives that are built in to building infrastructure that don't really align with what our communities need? And so I guess and I talked to Chair Rest this morning about this, but I feel pretty strongly that it would be irresponsible of us to include county jails as an allowable use in a local sales tax reform article that we passed this session when we have this study that's going to be delivered to the legislature on December 1st, 2024. And so I'm not saying, I'm open to the possibility that study will come back and they'll say, hey, local sales taxes are the right funding source to have communities, for communities to access if they need to build these facilities. That very well may be. I'm hopeful that we can get some really good information out of that study and recommendations from the people who think about these things, who really are involved day to day in decisions about what kind of, criminal justice system, public safety system we want and need. The recommendations about consolidation and regionality. And so I'm certainly open to, potentially, I'm hopeful that we can come to accord and push out a local sales tax reform article this session. But I will kind of be insisting that we omit these county jail facilities at least until after we receive this study. And we can always go back and add them in if that's the appropriate thing for us to do. But I just wanted to share that because, just because I became aware of this after we had already both included it in our positions. And, if we come in with the same position, a lot of times we'll just end up adopting it. So just wanted to clarify where I'm at on that. Thank you, Madam Chair.
Thank you, Representative Gomez. Senator Weber.
Thank you, Madam Chair. Just in response to Chair Gomez's concerns, there have been a lot of consolidations in rural areas already. In my home county, there was a new law enforcement center built somewhere between probably 12 and 15 years ago, that the only cells that are present are holding cells for 24 hours because we have a contractual relationship with the adjoining county for the long-term housing of prisoners. And I see this throughout much of my area already, and yet there is certainly a need for our communities, particularly our smaller regional centers, who quite frankly are going to be, who are the larger counties, who have a greater population, who will be more of a regional center for surrounding counties. Now, the reality of it is that everything in rural Minnesota, in greater Minnesota, involves distance. And so anytime that we have an expansion of a service territory for something such as prisoner housing, now you're requiring more vehicles being out on the road, because once a vehicle is transporting a prisoner, they're no longer available to respond to the needs of the communities when a call comes in, or indeed even personnel. And so I think at some point in time, those logistics are always going to vary from county to county, from region to region. And I'm not sure that at the end of the day, it is the state that needs to be making that decision as to who needs to consolidate and who doesn't. Because like I said, where necessary, it is already happening. And so I just wanted you to be aware of that.
Thank you. Thank you, Senator Weber. Anyone else? Then we will continue. Ms. Pollock.
Madam Chair and members, the next row pertains to the limit on the tax rate, the combined rate, including pre-2023, so bills, or local sales taxes authorized last year. And Ms. Hagler and I both discussed this a bit earlier. Just to note here that both the House and the Senate contain provisions that the 1% limit would apply to sales taxes authorized under the new reform article, and then any other taxes that had been previously authorized. Madam Chair, moving on to the next item, the public hearing required. Both bills do have some requirements to provide notice and opportunity for public feedback. The Senate requires that the notice of the hearing must be provided at least 60 days in advance and include specific information such as the tax rate, a description of the project, the amount of revenue that would be needed for each project, and the estimated time needed to raise that revenue. And then, Madam Chair, there's a new provision in the Senate article that was adopted in a floor amendment that would just put some additional requirements about what must occur at the public hearing. So the hearing must not be held before 6 p.m. The political subdivision must provide an address and a phone number for members to call or submit comments or questions related to the topic of the hearing. And then, Madam Chair, after the public hearing requirements in both bills, there's similar requirements to submit a resolution adopting whatever proposal is preferred after the hearing takes place, and that resolution is similar to what we have in current law now.
Ms. Hagler?
Madam Chair, the House also has a similar public hearing requirement. However, the advance notice for the hearing is a little bit shorter. The House does 14 days in advance and requires that it be published on the local jurisdiction's website. There is no requirement for the address or phone number option, but there is the same requirement that the hearing not be held before 6 p.m. There is also the requirement, because the House contains the equalization payment and reservation by DOR of some of the proceeds of the tax, the hearing notice and discussion at the hearing requires that the local jurisdiction disclose the potential amount of revenue retained by DOR for the equalization payment and the administrative payments to DOR and the Office of the State Auditor. And the resolution requirements, as Ms. Pollack noted, after the public hearing are pretty much the same as current law, and those provisions are the same as the Senate version.
Questions, comments? Please continue.
Madam Chair, the next item is the community support that is required. I mentioned before the only demonstration of community support that the Senate includes is the items that I mentioned that apply to regional sports centers and regional community centers. Ms. Hagler mentioned that the House's position on the community support required is different. And so she can discuss that now.
Madam Chair, on the House provision community support, letters are required from at least 2 surrounding communities affirming the need for all of the projects that the House bill authorized, and then those letters would be submitted to Department of Revenue for verification.
Okay, Ms. Pollack?
Madam Chair, moving on to voter approval required. The requirements are largely the same as in current law. For example, each project must be presented in a separate question. There are some additional requirements in the Senate language, which states that by voting yes, the voter is voting for the tax at the rate specified in the question, that they are acknowledging that they're imposing, that a new local sales tax would be imposed or increased or extended. And then, Madam Chair, in the Senate language, the ballot question must also include an acknowledgement that by voting no, the project that is subject to approval on the ballot question may be funded by an increase in property taxes.
Ms. Hager?
Madam Chair, on the House side, there is the same contents of current law with respect to a separate question for each project, the proposed rates, start date, et cetera. And there is a prohibition in the House article that if the question be put on the ballot at a special election, it cannot be the only thing on the ballot at the special election. And there's a prohibition on any, a no vote language resulting in potential property tax increases. And then there's a requirement that the jurisdiction submit sample ballot language to DOR for approval before it's submitted to the Secretary of State for printing, and I believe that, and then the ballot would also contain notice that the department would be retaining a portion of the tax for the equalization payment and administrative expenses.
Yep, thank you. Ms. Pollak?
Madam Chair, the next item is legislative approval required, and this pertains to legislative approval required in the new local sales tax reform article. The Senate is silent on whether legislative approval is required, because the Senate's position would be that legislative approval would not be required if the named projects meet the requirements.
Madam Chair, on the House side, I think it's just a little bit more explicit that if the project does not meet a requirement in statute, then legislative approval would be required. So it requires any tax not approved by DOR or one that does not meet the criteria, submit to legislative approval in accordance with Section 297A.99 with the January 31 deadline for resolution submissions. There would also have to be a submission of a statement of how the project deviates from the requirements under the new law, and also resolution from each surrounding community that provides support for the project. But if the surrounding community is a border city, then it would only pertain to Minnesota communities. And then if the legislature approves the tax, then it would be subject to a higher rate of revenue sharing. It would be a 20% rather than 15%, and that will be discussed a little bit later. And then any tax that is approved by the legislature would be subject to OSA financial reporting requirements that will also be discussed later.
Okay, Ms. Pollak?
Madam Chair, the next topic is administration and termination of the newly authorized local sales taxes, which is in Senate Section 3, Subdivision 6. Much of this language I've already discussed before, as it was added to the requirements of current law that under which local sales taxes are currently authorized and are operating. Again, no commingling of revenue from other taxes, notification to the commissioner at least 60 days before anticipation that the revenues from the tax will be sufficient to pay off the projects, and then notification within 30 days after that final payment has occurred. The Senate includes a one-year holding period on imposing a new local sales tax after a sales tax has been expired or terminated, which is also a requirement under current law. And then, Madam Chair, there is some language essentially stating that if a tax is over-collected, that difference must be returned to the commissioner for deposit to the general fund, which is also in current law.
Ms. Hager?
Madam Chair and members, the House Subdivision 5 does a lot of the things that Ms. Pollak also just described, with the 60-day notice to the commissioner that the tax will be sunsetting, a one-year prohibition on expired taxes being then renewed for another tax, and then The House provision does not contain language regarding overcollection, and the House language provides the procedure for if the political subdivision cancels a project that had already been approved, that it return the money to the department, and the department would have to adjust the duration of the tax. And that would be it for that provision.
Ms. Pollock?
Madam Chair and members, the Senate has no comparable position or provision on a number of items that are in the House article. So, Madam Chair, if Ms. Hagler could describe those.
Madam Chair, the subdivisions 16 through 19 on the House side, the collection, retention, contribution share, enforcement, and establishment of accounts, require that the Department of Revenue retain 1% of the tax proceeds for its administration of the tax, and then dedicate some of those funds to upkeep of the zip code database. There would also be a 1% retention for the Office of the State Auditor's administrative costs for auditing the taxes. There are some, then the language provides some details into which accounts these 1% need to be deposited. And then 15% would be retained by the department for the equalization distribution payments for taxes that fall under the general law. And then it would be 20% for any taxes that need legislative approval for authorization. And then the enforcement provision requires that DOR cancel any tax if it is notified by the state auditor that a city or county is not properly using funds or is not properly in compliance with the general law.
Ms. Hagler or Representative Gomez, we did not involve the state auditor. Oh, she's not here, but anyway, I'll ask Ms. Hagler. We do not involve the state auditor. We remove those provisions with regard to that office. What are the administrative functions that the House bill expects the state auditor to perform?
Madam Chair and members, the state auditor would be doing financial reporting for the local sales taxes. So the jurisdictions would submit annual financial reports in whatever form the state auditor decides is necessary or helpful. And then they would audit the tax essentially and say like, okay, you're using the funds for the proper purpose, and then provide a report to the legislature about, what they find in those reports every year. If the state auditor finds that the cities or counties are not in compliance with any of the law, they would provide a notification to those political subdivisions, and then there would be a response and notification time to get the city into compliance. And then if the city or county does not then comply, then OSA would notify the Department of Revenue that the tax is not in compliance, and that's when the department would cancel the tax. So we did, the House position did remove the Office of the State Auditor from the upfront approval of the tax, but then the OSA was then retained for the auditing purposes. And so the 1% retention of proceeds would be to cover the Office of State Auditor's administrative costs for performing those audits.
So the state auditor's role, we had considered that, didn't put that in like that, but is at the back end rather than the front end.
Madam
more
Chair,
or
that's
less.
correct. Yes.
Any other questions? Okay, next.
Madam Chair, the next provision is very generally called Other Provisions Apply. And these are kind of a handful of things that didn't really go in other provisions of the article. So one item is that the Senate requires that prevailing wage be paid on projects that are located in the metropolitan area. This section also includes the total tax rate, the total 1% tax rate that I mentioned before, and the maximum collection period for the tax, which would be 30 years, or the earlier of when the project is paid off, or 30 years. And then the Senate and the House, I believe, also include a reference to some administrative provisions of current law that would, by cross-reference, apply to the taxes that are authorized under the reform section.
Ms. Hager?
Madam Chair, the House article does also contain those similar administrative provisions, cross-reference to current law. The duration and 1% limit are, as Ms. Pollack described, are in other forms, other locations of the House bill, and that was discussed previously. And then the House position on the prevailing wage is that it would be applied to all projects, metro and non-metro.
Okay. Would just comment that we originally, in our bill in committee, had added prevailing wage to all of these efforts, and then in the committee was very much persuaded to limit the prevailing wage to local sales taxes that were going to be imposed in the metropolitan area rather than statewide. And, you know, there are all kinds of discussions all the time about whether there should be bifurcation in applicability of provisions, not just here, but in other portions of state law, to separate responsibilities, privileges, opportunities for the seven-county metropolitan area, sometimes just regional centers or cities of the first class, and then other local governments are treated differently. We have that can be, you know, a good policy, or it can be a questionable policy. That is historically something that we have embraced in certain areas of state law to have that separation. And we, in the tax committee in the Senate, unanimously approved the prevailing wage requirement to apply only within the metropolitan area, understanding that prevailing wage often is a characteristic of any local government project in the metropolitan area, and so it's not particularly a new burden or opportunity or responsibility, whatever word you choose to make, but that it might be much more of a extra cost in the non-metropolitan area, to the extent that even if all the stars were aligned, that one provision might well have a chilling effect on the opportunity for a local government in greater Minnesota to even think about a project that otherwise might be undertaken. And there are obviously a wide range of opinions on prevailing wage, and even we know that there's one state agency that is in charge of the rate, but the way in which it has been applied has been a really vigorous discussion in any number of the committees this session, and I think that that discussion is going to continue, and rightly so. But wanted to just point that out with regard to a change we even made in our own Senate bill with regard to what areas of the state it was going to be applied. Okay, next, Ms. Paul? Oh, I'm sorry, Representative Gomez.
Thank you. Just since we're discussing, prevailing wage on these projects, I just wanted to speak up for the House position, which is that we treat projects and workers in greater Minnesota and in the metro equally. And we did that intentionally. It is unusual, I don't know if it's unprecedented, but it would certainly be unusual to establish different labor standards for workers in the metro versus workers in greater Minnesota. We heard about some testimony in our committee, and the idea that maintaining standards for workers greatly inflates project costs is not really supported by the research, from what I understand. This is really like a way, we have to understand when companies misclassify workers, which is a lot of what this is, when you have, discrepancies in the prevailing wage across counties. That is not only a cost to that worker, it's also a cost to our public systems, because they're foregoing those payroll taxes, social security taxes, et cetera. When a worker's misclassified, that's put on the worker, but also they're just because of, the way that our tax system works and deductions and what you can do if you are inappropriately given, 1099 or misclassified. It reduces revenue to the state. And so it is in all of our interests, in our collective interests, to ensure that wage theft isn't happening across our state, that workers are not being misclassified across our state, and that workers are being paid on the books. And unfortunately, in the construction industry, there is a lot of these kind of abuses. There's a lot of wage theft. There's a lot of misclassification. There's a lot of keeping workers off the books. And in addition to those costs that it puts onto the public, it also puts our, our vast majority of employers in the construction industry at a competitive disadvantage with the ones who are flouting the law, with the ones who are cheating. And so, this, again, I just want to say that I haven't seen a lot of evidence that instituting a consistent statewide prevailing wage policy would have a huge impact on project costs, which we share, that concern. Obviously, the cost of everything has gone up, and we want our local partners to be able to do the things they need to do, build the facilities that they need to serve their communities. But establishing a two-tier system for workers in our state, the House just feels really strongly that that's not what we should be enshrining into law in our local sales tax reforms. Thank you.
Thank you. Senator Weber.
Thank you, Madam Chair. I've heard this a couple of times during the debate, that there are surveys that indicate this or that. Well, actually, in greater Minnesota, we deal more with actualities than with proposed surveys or purported surveys. I have a city administrator who was previously a consulting engineer. And over the course of his consulting career, Anytime that he worked with the community, and he always told them, if you're going to accept state monies that require prevailing wage, you better make sure that the monies equal at least 25% of the cost of the project, because that's the amount of increase you will experience as a result of having prevailing wage. And not only is it a problem within the construction of the project itself, but even as an engineer, the process by which the Department of Labor and Industry has broken it down is quite frankly not realistic with what many of the contractors, particularly in greater Minnesota, experience. As to the misclassification of workers, whether they're 1099 employees or what have you, I don't think prevailing wage really enters into that scenario. But the reality of it is that I would say that the majority of the problem in this issue actually lies with the Department of Labor and Industry. Because you talk about a two-tier system, but what is happening is there's a two-tier system when it comes to determining the rate of wages for workers in much of greater Minnesota. And quite frankly, I have talked with the governor and the Department of Labor and Industry since he came into office, but there never really seems to be any desire to try and correct the situation. Because the way the process is supposed to work is that they take local information within an area to determine what the prevailing wage is in that area. And if they don't have sufficient data there, they then move up the line until they get to the next county and the next county. And so quite frankly, the reality of it is that the metro wages are unduly impacting the minimum wage or the prevailing wage that's established for many of my areas in greater Minnesota. And so I do think that excluding the rest of greater Minnesota from the requirement is actually an acceptable thing. And if there is a local area that still wishes to have or abide by prevailing wage, they have the option to do that. But by requiring prevailing wage, the actuality is that local sales taxes will be removed as an opportunity of financing for many projects in greater Minnesota.
Thank you, Senator Weber. Anyone else? Representative Listegard?
Thank you, Madam Chair. I don't need to talk long. I support Chair Gomez's in the House position. I believe that in greater Minnesota that we have the right to earn a good living just like everyone else. And the 7-county metro does drive up those wages, and we're grateful for that. But I'm not, I can't just sit back and let greater Minnesota wages go down versus the Twin Cities or the 7-county metro. I'm going to fight for working class people. Doesn't matter if you're in the 7-county metro or you're in greater Minnesota. And I would argue that greater Minnesota needs more help. Our workers need more opportunity to earn a good wage. And so if we're going to be using state dollars, I think it should go statewide. So thank you, Madam Chair.
Thank you, Representative Listegard. Anyone else? Ms. Pollack?
Madam Chair, the next item on the list is the verification and oversight provisions in Senate Section 4, Subdivision 1. And these say that the political subdivision seeking to enact a local sales tax must submit the documentation and resolution of local approval to the commissioner before seeking voter approval of the tax. Documentation meaning how the project meets the definitions and requirements that we've outlined earlier here in the article. And then finally, that the, sorry, Madam Chair. That the, that if a political subdivision cancels a project that was approved by the voters, they must notify the commissioner, and the commissioner must proportionally decrease the maximum amount of revenue that the political subdivision may collect. And then if the political subdivision has already collected revenue, it must return the funds to the commissioner for deposit to the general fund. Madam Chair, That, I think, concludes the Senate article, and the House has some additional provisions that the Senate does not have comparable provisions.
Ms. Hagler, if you would just briefly describe the additional provisions.
Madam Chair, yes, the House provision does have a similar process for the department's approval of the tax. There are some specifications for when the materials would need to be submitted. The House specifies that materials can be submitted at any point during the year, but to be considered for the upcoming legislative session, they would need to be submitted by October 31st. As Ms. Pollock described, the cancellation requirements were in other parts of the House bill, but any canceled funds would need to go into the equalization payment account rather than the general fund. So I guess I can skip down to because we already described the Office of State Auditor auditing and enforcement provisions. The next provision would be Article 6, Section 6 of the House article that describes the equalization payment. Any political subdivision with a new local tax under the new system would contribute either 15% or 20% if they needed to come to the legislature into a sharing pool. And those that contribute to the pool and political subdivisions that do not have a local sales tax at all would be eligible for distributions from the pool. And the distributions are based on each jurisdiction's relative fiscal capacity, where fiscal capacity is equal to its adjusted net tax capacity per capita. And so jurisdictions with relatively low fiscal capacity will receive higher proportional distributions, and ones with high fiscal capacity will receive lower proportional distributions, and this is similar to the fiscal disparities program. And then to close out the article, there is an administrative appropriation to the Office of the State Auditor for the first 2 fiscal years for their administrative costs of auditing, since it will likely take time for new local taxes to be established and for that 1% of administrative revenue to be sufficient to cover their costs. And Madam Chair, that concludes the House
Yes.
article.
Thank you very much. We did notify publicly that we would take some limited testimony on either on the bill or on the local taxes, on the advisory committees or the task force report. And first on that list is Patty Nelman from Metro Cities.
Good morning, Madam Chair and members. Thank you for the opportunity to comment today. I'll be very brief. My name is Patricia Nauman. I'm the Executive Director of Metro Cities, and it's a little hard to go after very detailed and good presentations, but I will be very brief here today. Just want to comment on a few provisions regarding local sales taxes that are in the bills. And first, I want to give my thanks to both you, Chair Rest and Chair Gomez, for your work in sort of delving into these issues. They are important, and as you mentioned, Senator Rest, they get kind of grainy, and they're very detailed. The devil is certainly in the details. I just want to offer that Metro Cities does, first of all, support the repeal of the local sales tax moratorium included in both the House and Senate tax bills. And we do support the general direction of both bills in allowing local governments to impose local sales taxes, pardon me, I gotta still struggle with that, local sales taxes without the need for legislative approval for certain projects that are deemed to have regional significance and that are specified by law. And to that end, it's certainly recognizing, I would just say sort of recognizing the challenge of trying to come up with what defines an eligible project. We do support generally the direction of the Senate language, or prefer that language in terms of it being a little bit more expansive with respect to eligibility. And again, recognizing that these are complicated and challenging things to determine, but that would be our preference in the bills. Metro Cities does have a concern with the We certainly do acknowledge and support addressing equalization in terms of cities that are, with respect to cities not imposing local taxes. We are concerned with the idea of diverting a percentage of the local sales tax to qualifying cities and would prefer, I guess, and also encourage further consideration of that issue and perhaps looking at existing programs like local government aid. There are also certain other programs that do address equalization. And to that end, I just want to add, even though this is not a local government aid discussion, certainly recognizing that that is a key element of the local government aid program, and we would be very open to working with you in the committee to, maybe on a longer term basis to address maybe perhaps more equalization or how to address the equalization with these issues with vis-a-vis that program. And I will conclude here, Madam Chair and members, and thank you for your time today.
Thank you, Ms. Nauman, for your testimony. Next is Mr. Matt Mosman from MICA. Welcome to the committee. If you'd identify yourself for the record.
Thank you, Madam Chair, and members. Matt Mossman with the Minnesota Inter-County Association. So MICA and AMC sent a joint letter that I think
Yes.
captures
We
a
have it in
number
our
of our
packets, Mr. Mosman.
provisions at a high level. And I did testify or sign up to sort of flesh out some of the specific suggestions we had around a couple of those provisions. But I think in light of Chair Gomez's comments, I do just want to sort of maybe couch and respond. We hear the perspective about the concern about not wanting to overbuild criminal justice facilities and other facilities. And I think some of the recommendations that you'll hear from me today are really actually motivated by the same intention. I think that there's definitely a balancing act that needing to be struck between the definitions of the terms in this bill and the additional requirements, and how that then creates an authorization for local governments and counties to make these decisions without having unintended consequences to incentivize either design decisions or functionality and scoping decisions that bring in, frankly, more potentially services or functions that are needed or might be redundant just in order to satisfy the definition in statute. And so that's also the context in which we're going to offer some of our suggestions. I think at the same time, if you look at the list that was handed out in terms of the requests from 2023 for local sales tax, counties are also trying to sort of figure out how we fit into this conversation about authorizing local governments, cities and counties to impose a sales tax. The reality is that counties don't tend to be the lead local government on the amenities like convention centers and other facilities. Most of the high-cost projects that we undertake, capital projects, are infrastructure, both horizontal and vertical infrastructure that stems from the expectations that counties generally are facilitating on behalf of the state government or under direction of the roles and responsibilities that we have to carry out. And so those do tend to include criminal justice facilities. And I think it is not the case that there are these facilities in all of the counties. There are 9 counties that have no facility. There's 3 counties that have a joint facility. There's only 64 counties that have a fully licensed county jail. The other piece of that is that,
Mr. Mosman, is that information in the letter that you?
Sorry, it is not, but it was in the information that was submitted to both House and Senate tax committees, I think, back when we testified, and I'd be happy to bring it forward again.
Very interesting statistics.
Yeah, that was, and just to give credit, there was some testimony that was submitted by Mike Williams, who is the Stearns County Administrator and sat on the advisory task force on behalf of counties.
Thank you.
So with that, Madam Chair, I'll just go to a couple of the specific areas that we suggested, and I think it actually does go to the conversation about law enforcement centers and not wanting to sort of overbuild what is needed. Right now, the definition of law enforcement centers is written with the conjunctive and so as we understand it, the language as written would need to satisfy all of those criteria in order to have a facility. The reality is that as you look at where the court facilities are, maybe where the 911 emergency center is located, where emergency operations, which is only a county function, are operated, if those exist in other facilities, it might not make sense to have a project, a new facility that includes all of those from one jurisdiction to the next. And so we have suggested language that would modify that definition somehow, such that at least for counties, such that it might only include a portion of that list or one of those items in order to merge up. The other piece that we wanted to respond to in the definitions and the additional criteria and requirements, and we definitely appreciate and understand as well that there is going to be a need and there will be an expectation to have additional criteria that are in the bill or additional requirements that need to be satisfied in order to demonstrate the need for criminal justice facilities to access this local tax authority. But we also know that there was a robust conversation at the advisory task force about these facilities that ultimately came down on that they are sort of regional by nature and integrated into a system. And so we would, request that the conferees take a look at how the requirements around the need for bordering jurisdictions or others to also establish or to adopt resolutions in support in order for projects to go forward. Just as a quick example, Stearns County has 9 bordering counties. There's a lot of counties that might only have 1 or 2 bordering counties. So just as a practical matter, the language as it's written to some extent in both bills has different implications for different counties as to what would be expected. It's also, our position that the facilities do tend to be regional by nature, and that was also in some testimony that was submitted when the bills was heard. And then the final comment that I would just say is we also, I think maybe you've heard from cities throughout the bill hearings during the legislative session around the commingling language for projects. I don't have any wordsmithing that we've done on that, but we also share the concern that there just be clarity ultimately in the bill, that we have no concern or pushback on the needing to account for monies in a way that they can be clearly delineated to taxpayers and to oversight entities. But we do want to make sure that projects might be able to be funded from multiple funding sources. And I'd be happy to stand for any questions. There are other items around the definition of regional parks and trails where we prefer the House position on that language, and happy to stand for any questions.
Any comments or questions? Thank you, Mr. Mosman. Mr. Capo Rourke? Welcome to the conference committee. If you would state your name for the record.
Thank you, members, Madam Chair. My name is Capo Rourke. I'm the Executive Director of Minnesota Association of Small Cities. We advocate on behalf of the cities, 700 cities that are under 5,000. With regards to the discussion around local option sales taxes, we have...
It just cost you a quarter.
I missed one meeting, and so now I'm really nervous.
You think I'm not listening? I'm listening.
Now we don't need to raise taxes.
I would like clarification on what that's for, so I don't reoffend. Small cities has, so just for, there are 17 communities that have local sales taxes, over 20, and that's over 21 taxes. we really appreciate this move for clarity on how these can be implemented and removing the barrier of having to come to the legislature. We think that that will provide more cities that option to do that, especially some of our smaller cities who, frankly, coming to the Capitol can be somewhat of a burden in making those requests. We do think that in doing so, it will likely create a significant increase in the number of total communities that are putting on such sales tax, and that is likely to exacerbate a problem of cities with greater revenue options and hurt some of our particularly smaller cities that even if they did put on a local option sales tax will. Let the record show I missed the first meeting, so I'm clearly just racking up fines, and I'm fine with that.
I don't even know your rule.
So our concern is that we're going to see a greater exacerbation of some of our communities with the counts of their revenue. Having said that, we do appreciate the equalization efforts that the chair in the House put in. We like the idea of that. We think that should be an important concept. We do have concerns with the way that the House structured it. We have concerns in the fact that cities and counties and how they raise this revenue and what they use them for are usually distinctly different. And so I think commingling and splitting up that money between cities and counties could have greater problems and unintended consequences. So we would like to have more of a divide between cities and counties.
Okay.
That is it. Thank you.
Thank you very much, Mr. O'Rourke.
Do I just leave the money on the table or?
Mr. Kyle Makarios, welcome to the committee. If you'd identify yourself for the record.
Thank you, Madam Chair, and good afternoon, committee members. My name is Kyle Makarios, and I'm here today on behalf of the Minnesota State Building and Construction Trades Council, who represent 70,000 unionized construction workers across the state of Minnesota. And here today to focus on the requirement in both bills, and about which we just had some good, thorough discussion, that would require the payment of prevailing wages to construction workers on capital projects paid for by proceeds from local sales taxes authorized under the reform provisions in this bill. Madam Chair, I heard the discussion earlier, and we welcome this discussion. Senator Weber and I have had a number of discussions this year and throughout the years about these topics, and appreciate the opportunity to provide the perspective of the unionized construction industry to this debate. We strongly support the inclusion of prevailing wage requirements for these projects and think it reflects the best practices for taxpayer-funded projects. But we are deeply concerned and opposed to the language in the Senate bill that would limit these worker protections to the metro area. Madam Chair, I'd like to just talk a little bit about the merits of including prevailing wage requirements on projects, and I'd like to begin by quoting Minnesota statute, chapters 177.4.1. It states, "It is in the public interest that public buildings and other public works be constructed and maintained by the best means and highest quality of labor reasonably available, and that persons working on public works should be compensated according to the real value of the services they perform. It is therefore the policy of this state that wages of laborers, workers, and mechanics on projects financed in whole or part by state funds should be comparable to wages paid for similar work in the community as a whole." This is the principle in state law for requiring the payment of prevailing wages on projects paid for by the taxpayers, that we should procure the highest quality of labor, and that workers who work on projects paid for by the taxpayers shouldn't be less than those doing similar work in the community as a whole. And this is an important point I'd like to emphasize, that the prevailing wage rate is simply the going rate for construction workers in any given area. As Senator Weber and I have discussed a number of times, and we'd be open to discussions probably in a different committee about the survey process and the way it's conducted, the Department of Labor and Industry does an annual survey of workers in each county of Minnesota and certifies the most commonly paid wage rate for each craft as prevailing. We then require bidders on our public projects to pay at least those rates. While we can't in law stop out-of-state contractors from bidding on our public works projects, we can and should ensure that they don't come into our communities and undermine our local standards of living by bringing in lower wage, lower skilled workers. The next point I want to make, Madam Chair, is that we contend that prevailing wage will not increase project costs. In fact, many of the projects that this would apply to would pay the prevailing wage regardless of whether or not it's required by law, and that's simply because the prevailing wage is the going wage rate in any local area. It is built to reflect what local workers are already paid in the community, not to dictate it. And let me just emphasize that point one more time. Prevailing wage does not dictate a wage rate. It simply reflects what workers already make in our local areas. And it says that you can't pay less than that on taxpayer-funded projects. What prevailing wage will do, Madam Chair, is give a preference to high-skilled workers over lower-skilled ones. It will give a preference to contractors who invest in skills training and apprenticeship programs over those who don't. And it will reward those who win jobs based on skill, professionalism, efficiency, and productivity over those that pay low wages or pay cash off the books. And finally, Madam Chair, there is no other place in state law that limits this important provision to metro area workers. We think doing so would set a very bad precedent and would leave greater Minnesota construction workers vulnerable to watching their own tax dollars be used to undermine their local wage standards. The Building Trade strongly encourages this conference committee to adopt the House language on this provision, and we appreciate the opportunity to testify. Thank you.
Thank you very much, Mr. Vicarius. That concludes the list of folks who wanted to testify on the local sales and use taxes. And we're going to adjourn for today shortly. The Senate and the House are considering and will be proffering offers to address the issues that have not yet been adopted in an exchange of offers for both money items and non-money items over the weekend. And those offers and responses to offers, if you will certainly be made public. We're not planning on meeting until Wednesday, so there's not Monday. Sorry. We're not planning a meeting again until Monday, and the House has the gavel, so there's not an opportunity until Monday to publicly discuss the offers that we may be making to one another, and it's not a requirement to do so, but the Senate definitely will be doing that. But hope that can be part of the agenda for Monday. And I don't have our session schedule before me right now, but I believe the Senate is going in at 11. What? We're going in at 1 o'clock, so there would be opportunity in the morning if that's convenient for the House. And I think we have a full agenda, but we certainly will manage at your convenience to be here. Representative Gomez, do you have any comment on how you see the schedule going on Monday?
Thank you, Madam Chair. Yeah, we're kind of going to have to play it by ear and be at the call of the chair on Monday. We have Ways and Means meeting in the morning. Representative Agbaji and I have to be there for a vote. And I think we're going in at 11, but we'll just have to be in touch with the Senate, come up with a time that works for us all. And for what it's worth, the House has been won over by the Senate position on doing as much conversation about our offers in public as possible. And so that's certainly my intention moving forward. And
I think it's helped very much today on local taxes.
maybe, hopefully we won't talk about that anymore on Monday. But.
I know, but I think our positions are clear. And, well, I don't know if they're all going in the right direction at this point. to have a comprehensive article on local sales and use tax reforms, but I think it's important that the members of the public, as well as ourselves, understand where our positions lie at this particular point. So that's all I have to say. We will, I'll
Just-
call on you
just
in
that-
just a moment, but we'll wait for instruction and notice from your committee, particularly to Mr. Berggren, so he can inform our conferees as soon as it is determined when we'll be meeting, and you will be receiving a global offer from us either later today or over the weekend.
All right, thank you, Madam Chair. And yeah, so we'll call the chair on Monday, and happy Mother's Day to you and everybody else in the room.
Oh, and do you see that?
And you see
Did you
that.
see that? Here's our new flag. This is Statehood Day, so
Happy Statehood Day.
congratulations to Minnesota. Yeah. So, and on that note, we're adjourned.